Imagine walking into a building where billions of dollars move before the rest of the world even knows what's coming, where traders seem to know which stocks will crash before the companies release their earnings, where the win rate is so impossibly high that Wall Street veterans stop what they're doing and just stare at its peak. SAC Capital Advisors was generating annual returns of over 30% consistently, year after year. In an industry where beating the market by even a few percentage points is considered genius, SAC wasn't just beating it, they were lapping it. So, how do you explain numbers like that? That was the question that kept federal investigators awake at night. And when they finally found the answer, it didn't just bring down a hedge fund, it exposed something rotten at the very heart of Wall Street. Stephen A. Cohen built one of the most powerful trading operations in financial history. At its height, SAC Capital managed over $14 billion. It employed hundreds of analysts and portfolio managers. It moved markets, it printed money, and for years, almost nobody asked how. But behind the glossy performance numbers and the Greenwich, Connecticut compound was a machine that allegedly ran not on skill alone but on secrets. Illegal secrets. Information that regular investors could never access, fed to traders who knew exactly what to do with it. This is the story of SAC Capital. A cautionary tale about greed, power, and what happens when the line between edge and crime disappears entirely. The man who turned information into gold, Stephen Cohen, grew up in Great Neck, New York, the son of a dress manufacturer. He wasn't born into wealth. What he was born with was an almost supernatural instinct for the market. By his own account, he was making money trading options in college. By the time he founded SAC in 1992, named after his own initiative, he had already built a reputation on Wall Street as someone you did not want to be on the other side of a trade from. SAC's culture was built around one obsession: edge. In trading, edge means information or insight that gives you an advantage. Cohen demanded it from everyone around him. Analysts were pushed relentlessly to find angles, sources, and data points that nobody else had. The pressure was immense. The rewards were extraordinary, but somewhere along the way, the pursuit of edge crossed a line that could not be uncrossed. The network nobody was supposed to know about, federal investigators, began circling SAC in the mid-2000s. What they slowly uncovered was not a single rogue trader acting alone. It was a network. A sprawling, methodical system of relationships between SAC employees and corporate insiders, doctors, scientists, consultants, and industry, contacts, people who had access to material, non-public information. One of the most staggering cases involved a portfolio manager named Matthew Martoma. In 2008, Martoma allegedly received confidential data about a clinical drug trial from a physician consultant. The drug, which was being developed by Elon and Wyeth, appeared to be failing. Before the news became public, SAC sold off nearly $700 million worth of positions and flipped to short, essentially betting the stock would collapse. When the trial results were announced and the stocks plummeted, SAC reportedly cleared over $275 million. $275 million. On a single trade, based on information the rest of the world didn't have yet. That was only the beginning. When the walls started closing in between 2009 and 2013, federal prosecutors and the SEC built one of the most complex insider trading investigations in American history. One by one, former SAC employees started cooperating with the government. Names were named. Emails were pulled. Phone records were subpoenaed. 8 former SAC portfolio managers and analysts were either convicted or pleaded guilty to insider trading charges. 8. That number alone was extraordinary. It suggested this wasn't a culture of isolated mistakes, it was a pattern. The government's theory was stark. SAC had fostered an environment where the quest for inside information was not just tolerated, but where the edge was sometimes not an edge at all, it was a crime. And yet the man at the top, Stephen Cohen himself, was never criminally charged with insider trading. The billion-dollar admission in 2013, SAC Capital did something almost unthinkable. The firm pleaded guilty to securities fraud and wire fraud, making it one of the largest hedge funds in history to admit criminal wrongdoing. A record-shattering $1.8 billion settlement. Cohen was charged separately with failing to supervise his employees, a civil charge, not a criminal one. He agreed to a 2-year ban from managing outside money, which ended in 2018. He shut down SAC and converted it into a family office called Point 72, managing his personal fortune. The $1.8 billion fine, as staggering as it sounds, barely scratched the surface of what he had made. Here is the question that has never fully gone away. How does a culture of insider trading take root inside one of the most regulated industries on the planet, flourish for decades, enrich its participants by billions of dollars, and then end with the man who built it all walking away? Prosecutors said they simply could not build a criminal case against Cohen directly. The structure of SAC insulated him. Information passed through layers. He traded on ideas, not explicit tips. Plausible deniability, by design or by luck held. But the people who worked closest to him went to prison. The firm he built admitted to fraud. And the profits he kept were built, at least in part, on a foundation that federal law enforcement called SAC Capital is often remembered as a cautionary tale about greed. But it is really something more unsettling than that. It is a story about systems, about how institutions can be constructed in ways that push human beings toward lines they never imagined crossing, and about how wealth and power can sometimes rewrite the rules of accountability. Today, Stephen Cohen owns the New York Mets. He still manages billions. He is, by most measures, untouched, and somewhere, a young trader is sitting at a desk, chasing an edge, wondering exactly how far they're willing to go to find one.